You know how you can look at the exact same set of numbers, but hear two totally different stories? Well, that's exactly what we're going to decode today with China's 2025 economic data. On one hand, you have the official story of resilience and smart strategic growth. But on the other, you have a story of some deep, deep trouble. So, which one is it? Let's get into it.
So picture this. It's the end of 2025. The official message coming out of Beijing is just glowing. The headlines are all celebrating this vibrant market, growing spending, and an economy that's just confidently marching forward. From the outside looking in, everything seemed pretty great. But of course, that's only one version of the story. So what happens when you start digging a little deeper? What if the real story isn't in the numbers they showed you, but in the ones they conveniently left out?
Okay, so first, let's walk through the official narrative. You got to understand the story they were telling before we can start to pick it apart. This is the version of events that the government wanted the world to see, a picture of stability and total confidence. And this rosy picture came from a big year-end review published on December 29th by the state-run Xinhua News Agency. It was basically called Data Reviewing a Report Card, and it was meant to be the definitive summary of how China's economy did that year. So here are the highlights they pushed. The report talked up this sustained expansion of investment. It pointed to a pretty solid 4% growth in consumer spending, and it really celebrated all the money pouring into key areas like high-tech manufacturing. The message was crystal clear. China's big plan is working, and the economy is strong.
But it didn't take long for analysts to start poking some serious holes in that story. They started pointing out some pretty huge things that were missing, which, led to a very, very different take on the exact same year.
And this quote from one analysis just hits the nail on the head. The argument isn't that the official summary was lying exactly. It's that it was being incredibly selective. It was basically using a few shiny, good news stories to distract from some much bigger, much darker trends. There's actually a name for this. It's sometimes called cosmetic data presentation. Think of it like a company that only talks about its one tiny, profitable project while totally ignoring the fact that the rest of the business is losing a ton of money. You're getting a truth, just not the whole truth. All right, so let's put on our data detective hats. We're going to look at three key numbers that were either buried or completely left out of that official success story. And we're starting with the big one, investment. For decades, fixed asset investment, that's just the money spent on big stuff like buildings, roads, and machinery, has been the main engine of China's economy. So the big question is, how did that engine actually do in 2025? And there's your answer. For the first 11 months of the year, overall investment didn't grow. It actually shrank by 2.6%. That isn't just a slowdown. That's a massive reversal.
Now look at this trend line, because this tells the real story. You see how the economy starts the year with healthy growth, around 3 or 4%? And then it just steadily drops month after month until it crosses into negative territory around September. The engine didn't just sputter, it completely stalled out.
Okay, next up, the one sector everyone is always watching, real estate. This number was nowhere to be found in that glossy year-end report, and when you see it, you'll understand exactly why.
A staggering negative 15.9%. I mean, wow. That is not a slowdown. That is a collapse. Investment in the property sector, which is a gigantic piece of the economy, basically fell off a cliff.
And again, the trend is what's so critical here. This graph shows it wasn't just bad, it was getting worse all year long. The drop just got steeper and steeper, accelerating from an already terrible minus 10% the year before. The crisis in real estate wasn't getting better, it was actually getting deeper.
All right, our final piece of evidence is private investment. Now this one is so important because it's a real-time barometer of confidence. It tells you what actual business owners and entrepreneurs think about the future. Are they optimistic enough to put their own money on the line?
And the data shows, nope, they were not. Just look at this chart. That sea of red shows a consistent and worsening decline all year long. That red arrow really tells the whole story, doesn't it? Confidence was fading and private money was heading for the exits.
So how on earth can both of these stories be true at the same time? Well, it's not really about one being true and the other being false. It all just comes down to where you choose to point the spotlight.
This slide really breaks it down. See, the official story focused on the parts, those specific, smaller sectors that were still growing, like high-tech. But the critical analysis looked at the whole picture, the massive, overarching indicators for investment and real estate, which were all flashing red.
And that's really the key takeaway here, isn't it?
The same pile of data can tell a story of incredible success or a story of a brewing crisis. It all depends on the frame. It's such a powerful reminder to always ask yourself, what am I not being told? What's been left out of this picture?
Which leaves us with a massive, forward-looking question. For decades, China's economic miracle was powered by that engine of investment. This 2025 data pretty strongly suggests that engine is broken down. So, what's next? If the old model doesn't work anymore, what is going to be the new driver of growth? That is the billion-dollar question for China, and really, for the whole world.